I think those numbers send a clear message that the Chinese market still remain as a center of a global investment. But what really matters is the composition and quality of FDI. We have seen that the two major shifts in China FDI landscape. The first one is used to focus more on the labor-driven FDI. Now we see the shift into innovation-driven FDIs. So instead of focusing on low-cost traditional manufacturing sector, we have seen that the more investment flowing into high-tech sectors like AI, semiconductor, or the renewable energies and smart factories, etc. For example, in 2024, Germany and Singapore increased their investment in China, particularly in the green industries and high-tech sectors. Also, if you look at the medical instrument industry, we see that the more than 80% increase in FDI in the last year. And the second point is the geographic diversification of FDI across countries. So the FDI in China is no longer concentrated in just a handful number of cities. Now we see that the more investment flowing into central and western regions as well, supported by their improved infrastructure and the enhanced business conditions. There are more EV production, smart factories, those new industries is increasing in these regions, and which means that there will be more investment opportunities, more jobs, and a more balanced economic growth across countries. I believe the new action plan provides a great investment opportunity for both companies already in Chinese market and new company looking to enter the market. For company already in China, this new action plan expanded their access to this lot of new investment options and expansion. For example, the new action plan included the use of a domestic loan for domestic funding for their growth, which means that now those multinational companies can use local financing to support their investment and then opening their headquarters and then facilitate the local expansions. Another component of a new action plan is the lower barrier of strategic equity investment and mergers and acquisitions across border, which means that those foreign companies already successfully doing business in China, they have more reinvestment options in China. So instead of bringing money outside of China, they can reinvest in a more profitable and new high-tech industries. And also, I find that there is an enhanced government procurement system from this new agenda, ensuring the more equal treatment of all the companies without consideration of their ownership structure. Definitely, it will provide a new investment opportunity for companies in the B2G sectors. And for companies who want to come into Chinese market, this new action plan also has significant implications. The first one, the new plan open up the certain key service sectors, including telecommunication, education, and healthcare sector. Second, now having more options and flexible options of M&A, the foreign companies can choose to acquire established local company when they enter into Chinese market, which will reduce their risk and accelerate their future growth. There are many advantages, but I want to highlight the three advantages. One, still the massive consumer market in China is the biggest advantage for foreign investors. The population, 1.4 billion population, definitely provide a huge incentive for this foreign investor. But I also want to highlight that the rapidly increasing the middle income class. We haven't seen that the past few decades, this middle income class rapidly increasing, and their demand for consumer goods, automobile, and electronics, these consumption demand are huge. Second, China still play as a key players in the global value chain. So all the companies who want to scale up or to integrate China into global value chains, they have a strong incentive to jump into China. As China investing and expanding more resources in these emerging industries and innovative industries, they have a great incentive for the foreign companies to enter into Chinese market. Another advantage of a Chinese market is a strong government policy reform, steadily improving the business condition and confidence of foreign investors. We haven't seen that there are a lot of the foreign investor protection, intellectual property right. The infrastructure will be enhanced in the future as well, and it will provide a huge advantage for foreign investors. Deglobalization and decoupling from China will definitely incur significant consequences in economic efficiency and technological progress. First, deglobalization basically incur huge inefficiency cost because globalization basically allow companies to optimize their production cost by choosing optimal space to produce their product. As companies are forced to kind of change their production site, the companies are required to invest more time, and then it will incur significant cost in logistics and lead time. Second, the cost will be the technological progress aspect. Decoupling and the deglobalization means that there will be less knowledge sharing across countries, and those companies innovative industry need to develop their technologies independently, and deal with all fragmented technology base and standard will incur significant social cost. So at the end, it will delay technology progress. So instead of retreating from deglobalization by having more industrial and the international collaboration and corporations, we can have more sustainable outcomes for all the economies.